It's no secret that futures prop firms are just simply better than Forex prop firms. They are the future. I mean, just look at the numbers. Futures prop firms have made more millionaires, more people consistently hit 10K per month with futures prop firms. That's just because they're that much more scalable and they're easier to scale. And as someone who comes from a Forex background and I've made money with Forex prop firms, I've been a top trader for prop firms like Funding Pips. That's why I have things like this to show you. Look at that. I've made more money trading futures prop firms than I've ever made trading Forex prop firms. Heck, I made my first ever 6 figures in a single payout trading futures prop firms. But I get it. Getting into futures can be confusing. I mean, I knew about futures for years before I even got into them because I just didn't understand how they worked. I always used to think, okay, how do I enter a trade? What is a contract? What platforms do I trade on? All that stuff can seem confusing and overwhelming at the start. That's why most people don't ever get into futures. That's why in this video, I'm going to show you how to transition from Forex prop firms to futures prop firms. I'm going to show you everything that you need to know in order to start trading futures prop firms today. I'm going to show you which platforms to use, the best prop firms to use, everything, how to enter a trade, how to set a stop loss, how to set a take profit, everything that you need to know to be able to start trading prop firm futures today, I'm going to show you. So if that sounds good to you, be sure to stick around and watch this video all the way through to the end because futures prop firms are the biggest opportunity in trading right now. They are the quickest way to get to 10K per month day trading. Now, the best place to start is what the hell are futures. The simplest way to understand futures, right, is that in Forex, you trade currencies. In futures, you trade exchange regulated contracts. In Forex, you trade currencies through brokers. In the futures, you trade those contracts through exchanges like the CME. In Forex, the price, and this one's a painful one because the price varies between brokers. Whereas in futures, the price feed is identical for everyone, guys. Everyone is seeing the same price action. It's all the same in the future space because it's all regulated. In the Forex trading space, spreads, they change all the time. In futures, there is no spread manipulation because everyone is trading in a regulated space. I know you've experienced this when sometimes price might get near your stop loss, right? When you're trading your Forex prop firms and then you get wicked out. And then it's so annoying because just that little wick and then price goes in your direction. Whereas, guys, when you're trading futures, you're going to see this when you start trading them. There is no spreads, guys. Like price can literally get to like 0.005, as close as it can get to your stop loss level, and you're going to see it won't tag it as long as it doesn't hit that price. And that's the beauty of it, is that in Forex, you're spreaded out of trades because brokers can open the spreads on you, the prop firms can open the spread on you, all that bullshit. But in the future space, it's not like that. In the Forex space, obviously the leverage depends on the broker. That's why you can see some prop firms offer different leverage. There's none of that in the future space. Everything is the same. Obviously in Forex, sometimes your orders get slipped and you can get different executions, which is very frustrating. And as I've said, in the futures, there's none of that. Everything is regulated and transparent because it's centralized. Whereas in the Forex space, it's not centralized, right? It's not fully centralized. In the future space, guys, you're trading the same values as everyone else. The same point value, the same tick value. Why does this matter? Because for prop traders, futures are way cleaner. There's less manipulation, and you're going to see when you start trading them, you're just going to see how clean they are. It's beautiful. It's more professional, more scalable in the prop firm space than Forex, and you're going to see as we get further into the video just how scalable are because of the opportunity and the way things are structured. So you might be thinking, what the hell even is a contract? What does contract mean? Well, to put it in the simplest way for you guys to understand this, a futures contract is just an agreement to buy or sell something like the S&P 500 index at a certain price. But you don't need to hold the contract until it expires. You just trade the price movement like Forex. In Forex, you're not actually like buying the currencies, or you're just trading the price movements off the currencies. It's the same within the futures. A contract just allows you to trade the price movement. So you're not buying the actual S&P index, you're buying the contract that tracks its movement. And a simple analogy is that think of a futures contract like a ticket that lets you profit when the price moves up or down. So what are minis, micros, ticks, points? I know you've probably heard that before and you just think, oh, that sounds super confusing. I promise it's not confusing. I'm going to break it down for you. It's actually quite straightforward when you actually understand logic behind it. It's very straightforward. So what are E-minis? Let's start with the minis, right? What are E-minis? E-minis are the main futures contracts traders use. So the easiest way to think about it is just think about it as a label for like the main contract. And obviously, so the S&P 500 is called ES. The NASDAQ is called NQ. The Dow is called YM. Crude oil is called CL. Gold is called GC. Now, what are micros? Micros are literally smaller versions of the main contracts, the minis, right? Remember, the E-minis are the main contracts. Micros is just a miniature version of the mini. Think of them as the 0.1 lot version of futures. So the micro S&P 500 is called the MES, which just stands for micro S&P 500. The micro NASDAQ is called MNQ. The micro Dow is called MYM. The micro crude oil is called MCL. The micro gold is called MGC. Just all it's done, they just added an M in front of the ES and NQ, YM and GC to just reference that this is the smaller version of the main contract. And that's it. Micros are simply 1/10 the size of the E-minis. Same charts, same movement, just smaller money. And the reason why I say these are perfect for beginners is that with micros, you're actually able to trade a smaller dollar amount. So that means that you can actually control your risk a lot better when you're trading. So it's easy to not over leverage. Ticks and points. What are ticks? What are points? I know a lot of people get confused when they get here because it just sounds super confused, like ticks and things like that. No, a tick is the smallest possible movement in a futures market. So for example, with micro NASDAQ, which is the smaller version of the main NASDAQ contract, the E-mini, right? One tick equals 0.25 points. One tick is worth 50 cents. There are 4 ticks within a point, and 1 point is worth $2. So if price moves 1 point, that means price has moved 4 ticks in tick language. This means that if NQ moves 10 points and there's 50 cents within a tick and there's $2 within a point, that means that if NQ moves 10 points in your favor, that 10 points, you times it by $2 because that's the point value. That means you've profited $20. Now you might be thinking, okay, that makes sense, but what determines the value of the point? Now that's what you got to think about the contracts. One micro contract, one MNQ equals $2 per point. So if you entered 2 MNQs, which would be like 2 micro contracts, that means that your value would go up to $4 per point. Each contract in the micro NASDAQ is worth $2. Now, what is a point? A point equals a full unit of price movement. The Forex equivalent of this is a pip step times 10. Now let's get into like the point values and contract values so you actually understand like the calculations of everything. Every futures contract has a tick value, which is the smallest movement money value. Every contract has a point value, which is how much one full point move is worth. And point value equals tick value times ticks per point. Remember, in NASDAQ, we have the E-mini NASDAQ, which is the main NASDAQ. We have the MNQ NASDAQ, and obviously they're valued differently. Remember, the micro NASDAQ, which is MNQ, is 1/10 of what the main NASDAQ, the E-mini, is. A point value in one contract of the E-mini is $20 compared to the micro NASDAQ, which is $2. So remember, it's 1/10 of the value. There's 4 ticks in 1 point. The tick value of the E-mini is $5 and the tick size is 0.25. In the micro, the tick value is 50 cents. There's obviously 4 ticks in 1 point and the tick size is 0.25. In the S&P 500, we have the ES, which is the main one, and the MES, which is the micro. As you can see, it's a bit bigger in point value. One contract of the E-mini ES equals $50 per point. One contract of the micro is $5. There's 4 ticks and 1 point across the board. So if ES, the main contracts, move 5 points, that means you've made $250. And obviously if MES, the smaller version of the main contract, moves 5 points, you make $25. Now with the Dow, you can see things start to change a little bit. again, we have a main contract and we have the micro contract. The point value of the E-mini DAO is $5. The point value of the micro DAO is 0.5. There's one tick in 1 point. The tick value is $5 in the E-mini, and the tick value is 50 cents in the micro. The point value of the main contract is a lot lower. All right, guys, when it comes to gold, again, we have the main contract, which is GC, and the smaller contract is MGC. And as you can see that in the main contract, the point value, one main contract of gold is equivalent to $100 per point, which is insane, right? And obviously in the micro gold, one contract is equals to $10 per point. There are 10 ticks in 1 point across the board. The tick value of the E-mini gold is $10 per tick. In the micro gold, it's $1 per tick, and the tick size is 0.1. Gold is super powerful because a 5-point move in GC equals to $500. And it's crazy because just think about how volatile gold is. All right, now getting into the prop firm stuff, as someone that's coming from the Forex prop firms and is getting into like the futures prop firms, what are the best markets for prop traders when it comes to futures? I'm gonna recommend you trade the micros because, like I said earlier, you can control your risk a lot more. The micros I'm going to recommend is just stick to S&P 500 or NASDAQ. That's all you're going to need to be able to make money in the future space. If you're gonna go trade gold because it's easier for you to transition, because maybe your strategy is like, I don't know, more keen to gold, it's gonna be the same as from going from XAUSD to just GC. But in general, I'm gonna recommend that you guys just trade micro S&P and micro NASDAQ. The reason why I suggest micro S&P and it's best for beginners because obviously it moves slowly. It has a smooth structure, guys. You're going to see when you start trading futures just how smooth they are, guys. They're easier to control the risk, like I've already said, and they have predictive behavior because obviously they're stocks. They're very unidirectional, right? Like if they're moving in one direction, they're going to move in that direction, and you're going to see when you start trading them. And if you're a price action trader, a smart money concept trader, you don't even need to change your strategy because you're coming from Forex to prop firm. It's just applying it at different times, which we're going to get into as we obviously get further into the video, like the times of day you should be focusing on as a futures prop trader when you're trading MES and MNQ, right? Now, if you want a bit more speed and you like a bit more, you know, a bit more jazz in your source, might I say, MNQ is another one I recommend because MNQ just offers bigger ranges. It's a lot more volatile, which means that there's going to be more opportunity, and it has predictable behavior as well, and it is unidirectional. So if it's moving, it's gonna move. I'm telling you, like it's totally different when you come from Forex because you'll be thinking like 50 pips is a lot. 50 pips is nothing when it comes to futures, guys. I promise you. NQ can move 500 points in a day, which is the equivalent to 500 pips. It can move 200 points in a day. These are very, very, very volatile markets, and that's good because as traders, we need volatility. All right, so what are the best times to trade futures? Unlike Forex, where you tend to see big market volatility in mainly the London session and the New York session, NQ, ES, YM have additional time-sensitive volatility injections known as the AM session. I don't know if you've ever heard that before, or the PM session. These are just additional times where NQ, ES, and YM tend to move a lot more. And these sessions offer volatility for trading these futures markets, and it's good to focus on those to look for your setup. NQ, ES, and YM do move in London. I promise you right now, you can catch super nice moves in London if you want to trade in London. But I recommend you start focusing on the AM session and the PM session because you're going to see that it's beautiful when it comes to those times of day. It just moves so beautifully. The AM session starts at 9:30 New York time, and it's easy to just think of everything in New York time, and goes up until the start of the lunch hour, which is actually more than an hour. The PM session starts at 1:30 PM New York time and goes up until 4:30 PM typically on most futures prop firms. You're going to see that you get cut off with most futures prop firms at that 4:30 or just 4:15 or 4:10 mark at the moment, because I know there's talks of like in the future it's going to be running 24 hours, but at the moment, as of now, for most futures prop firms, it typically gets cut off at 4:30. Forex traders use MT4, MT5, Trade Locker, C traders to be able to trade Forex. Futures traders use platforms that are purpose built. So different platforms have different advantages, right? So we have a couple different platforms, but the main ones that you're going to see is TraderVert, Ninja Trader, and Rhythmic. I'm going to be honest, I've only ever used Ninja Trader like once or twice, and that was confusing as hell. So I don't recommend it as a beginner. I've never used Rhythmic. I'm just being honest. You're gonna have to go into other videos to watch that. I've never used TraderVert because it's simple. All I need to know is how do I buy, how do I sell, how do I put my stop loss, how do I put my take profit. That's it when I'm trying to trade on platform. I'm not trying to understand all these other technical nitty-bitty stuff. It can get a lot more technical with NinjaTrader than that, even though they're great platforms. But I've just found that TraderVert is simple because all I want to do is just be able to get in my trades and get out. TraderVert is very clean. It's fast. You don't need to install anything. You just literally just log on after you buy like a futures platform account. You get your login details and you just go to tradervert.com and then you just sign in and you log on it and you're all set. And it's supported by most prop firms. NinjaTrader, like I said, it's a lot more advanced, but they have the best charts. From what I've seen in the space is that everyone always says NinjaTrader has the best charts. They have super powerful tools. What are those tools? I couldn't tell you because I've never really used them. And it's a professional grade platform. And they're also supported by most prop firms. Rhythmic is well known for its fast execution. They're also supported by most prop firms in the future space. Now, which platform do I recommend? If you're a beginner, like I said, I personally use TraderVert. NinjaTrader is great. Rhythmic, I've heard is good, but screw everything else. You just want to be able to get in your trades and get out and not confuse yourself. I just recommend TraderVert. But if you're like charting and you're a charting enthusiast and you want to do many different things, of course, get into all that stuff. I couldn't tell you about them. If you want to get into that, get into that. But I just recommend TraderVert because it's the easiest to actually start trading futures. And what we want as we're getting into futures is simplicity. We don't want to be beating ourselves up for like, oh yeah, how do I do this? How do I do that? We just want something that's simple because we're just taking our price action mindset from Forex and just applying it into futures. So all we need to be able to essentially is just be able to know, okay, how do I buy? How do I sell? How do I set my stop loss? How do I calculate my risk? And that's it. The rest will come as you improve. But in order to actually start trading them, in order to actually start making money, you don't need to know everything like that, right? You need to know the basic stuff, and TraderVert just makes it simple to be able to do that. Now, speaking of trades, how to place trades, take profits, stop losses, and how to enter trades, I'm just going to go into my TraderVert platform and actually just show you a full tutorial of actually how to enter a trade, how to set a take profit, how to set a stop loss. Let's get into a TraderVert chart. All right, guys, as you can see, we're now in the TraderVert platform, and you get access to the TraderVert platform by getting a prop firm futures account. Once you get a prop futures account, you'll get sent login details, and then once you log in, you'll be able to access the platform and you'll be able to access the account that you bought. Over here in this top left, we have the names of the contracts. Remember, we have NASDAQ, which is NQ, as you can see, that's NQH1 here. We have MNQ, which is, remember, the micro NASDAQ, so that's the smaller version of the NASDAQ contract. We have YM, which is the Dow Jones. We have ES, which is the E-mini S&P 500. We have GC, which is gold, MGC, which is the smaller version of gold, MES, which is the micro S&P 500. So if you can see here, we have our buy market and our sell market. That's just in the Forex space, the equivalent of buying and selling. You know, in MT5 or MT4 or C-Trade or whatever your platform you use in the Forex space, you have a place where you can enter how many lot size you want to buy, right? Well, that's what this is it. This number here, if I enter 1 and I'm trading micro, 1 equals 1 micro contract of NASDAQ. So that means that that's going to be a value of $2 per point. If I want to add another micro, I just change it to 2. So that means now I'm buying 2 micro contracts of NASDAQ. So that means that the point value is going to be $4 a point. If I want to buy 1 micro contract of NASDAQ, all I need to do is go here, enter 1, and then because I want to buy, I just put buy market. And that's going to enter me in the position. Now, once I enter a trade, and let's say now I want to be able to calculate my stop loss, and now let's say I want to risk 20 points, which you could say is the same as 20 pips, right? It's very simple. I just need to be able to understand the value of what I'm trading. Right now, I'm trading micro NQs. So if I want to risk 10 points here, I'll literally just look at these numbers on the right here, and I'd be able to understand my 10th column is here, right? So if I want to risk, let's say 20 points on this trade, I'll look at my entry. So my entry was at 25,104, right? I want to risk 20 points. So I'll do is I'll calculate 25,104 minus 20 points, which would give me 25,084. So I look for 25,084. And then here, if I want to enter a stop loss now, this is where it can get a bit confusing for some people. With stop losses, they work in terms of limits when it comes to actually trading futures, right? So if I want to enter a stop loss, all I need to do is go to that 20,084, find it, just click on it, and you can see you can either do sell one stop or buy one limit, right? But because we're buying and we want to be able to set a stop loss, right? All we're doing is we're going to want to put sell one stop, because we have one micro contract on and we want to put our sell one stop at that 20,084. And all that means is that we're telling the market that I want to stop the sell because we're buying, and if the market starts to sell off, that's not good because we're buying. So we want to stop the selling off at that 25,084, and that's it. That's how you set a stop loss when it comes to trading futures. You do them in stops. So obviously, if it was selling, for example, right? So of course, if you want to exit and close the trade, all we need to do, you can either press the X here, or you just put exit market here, and it cancels out the trade. If we want to sell, for example, would sell one micro contract, which is the equivalent of $2 per point. So we'd enter that sell market. If we want to set a stop loss for the sell side, we're going to go above the market as we would. Let's say we want to set a 20-point stop loss from where price is at, from where we entered. We entered at 25,119. So plus 20 points is going to be like 25,140. So look, find that 25,140. We'll click again on the chart, and you can see now it's a buy stop that we're trying to do because we're selling the market. So if the market continues trading higher, we want to stop the buy. That's how you enter the stop loss, and we'll just click that, and then you're in the trade. Now that's your stop loss. Now if we're setting a take profit, we're going to be doing that in the form of limits. So let's say we want to put our take profit at this low here. All we do is just click where the low is, and you can see it says buy one limit. So that means that if price gets to that, that's going to activate that limit, and we're going to be taken out of the trade, and that's going to be our take profit set. Now you need to be careful because these are separate orders. It's not the same trade, if that makes sense, but it allows you to be able to control the trade you're in. So let's say price went to here and your take profit was here, and price reversed and actually started trading higher. You're actually going to be entered on a buy as price breaches this buy stop, because now you're actually entering on a stop. So you need to make sure you're exiting when your take profit is actually hit or when your stop loss is hit. Just make sure you go in your back in your trade event and just cancel all orders, and that's it. This is the simplest way to enter trades and set stop losses and take profits for our trades when it comes to trading futures. All right, guys, so now that you know the basic future stuff, that's going to allow you to actually be able to go in and start trading futures. You know, what is a contract, what is a micro, what is a e-mini, the value per point, how to enter a trade, how to set a stop loss, how to set a take profit, which platform to use. Let's get more into like the futures prop firm side of things, so you guys can get an understanding of like the main difference between Forex prop firms and futures prop firms, because there is a difference in the Forex prop firm space, guys. A notable difference is that in Forex, you have a lot more drawdown. The average maximum drawdown that you have in the Forex space is between 8 and 10%. In futures, it's a very different space. You have a lot less drawdown. The average drawdown is between 4 and 5% per account, but obviously it comes with its pros and cons. See, in futures, you're offered 50k accounts, 100k accounts, 150k accounts. The biggest account you can get in futures is 150k. A notable difference is that Forex prop firms are expensive. Oh my god, they are so expensive. And if you're someone that's just starting out, that's just trying to build up and actually trying to get some momentum going, you're gonna burn a hole in your pocket. I'm pretty sure you've noticed that an average of 50k account in the Forex space is like $300, and I'm sorry, but not everyone has $300 to spend each time to pass an account. In futures, it's significantly cheaper. Although that comes with less drawdown, on average, a 50k account in the futures prop firm space is $90. So for the price of one 50k account in the Forex space, you can get 3 futures 50k accounts. That means you have 3 attempts for the price of 1 attempt in the Forex space. Now in the Forex space, you have 2-step evaluations. That's like the main thing. In futures, the main thing is 1-step accounts. There is no 2-step evaluation, so it is a lot easier to pass because you only have one phase to get through. Another noticeable difference, in Forex, you have no trailing drawdown. In futures, you do have trailing drawdown. You have what they call end of day drawdown, which means that let's say you open an account and you have a fresh 50k account. Your drawdown is going to be obviously 4% off that, which is going to be 2,000. Your maximum loss is going to be at 48,000. But if you make 2,000 dollars on that day, the next day that's going to be trailed up. So your new maximum loss is going to be at 50,000. So it trails your drawdown up, but it only stops trailing from there. So that means that your new and final drawdown is going to be, your account cannot go below 50,000. So that's how the end of day trading drawdown works. They do have a live trading drawdown as well. A live trading drawdown trails you as you make money. So say if your drawdown is 2,000, right? A live trading drawdown is that if you're trading and let's say you're up 2,000, it's going to trail you live. It's not going to wait until the end of the day for the next day for it to reset. It's going to trail you. So if you make 2,000 and the trade starts to retrace again, so if the trade retraces you by 1,000, you've actually lost 1,000 in drawdown. So that's how live trading drawdown works. It trails you as your trades progresses. So it just forces you to take profits quicker. Obviously, there's no consistency rules in the Forex space. In the futures prop firm space, consistency rules are a thing. Most of the time in the challenge phase, you're going to find that most prop firms offer a 50% consistency rule or 40% consistency rule. That means that if you have a profit target off your challenge, because it's a one step, let's say the profit target is 3,000, right? On a 50k account. So you have to be able to meet that target. Your biggest day cannot be more than 50% off your profit target. So that means that to be able to pass the account at 3k, you need to have your biggest day at 1,500. Obviously, some prop firms do have a leniency. Let's say if you make 1,520 or 1,510, and then the next day you make 1,510, let's say, they're still allowed to pass. Some can be a bit funny with that. Some prop firms do have a 40% consistency rule. So to be able to work that out, you literally just take your overall profit target, calculate 10% value. So if your overall profit target is 3,000, that means 10% of 3,000 is 300. To be able to calculate a 40% consistency rule to see the most you can make within a day to still be abiding by that consistency rule, you just take that 3,000 divided by 10 and times by 4. So that means that the most you can make to be able to pass that challenge at 3,000 is going to be 1,200. Obviously, if you violate consistency rule, that doesn't mean you violate the account. I just want to make that clear. It just means that your profit target will go up until you meet the consistency rule. Now, in the Forex space, the norm is bi-weekly payouts or monthly payouts. In the futures prop firm space, guys, it's a bit different. They do have weekly payouts, daily payouts, or bi-weekly payouts, just depending on the model that you buy. All right, the downside to Forex prop firms is that they're not as scalable. The beauty of futures and why people go to futures is because they are scalable AF, guys. I don't know, obviously be cussing that, but they're scalable as fuck. Okay, they're super scalable. Futures prop firms are super scalable, and the reason why I say they're scalable is that in futures you're allowed to copy trade. All that means is that you're able to open the same trades across different accounts, and that's the beauty of futures prop firm, guys, because they're so cheap. Think about it. Let's say you spent $500 on futures accounts. Let's say you bought 5 futures accounts. So that means you can trade all those 5 accounts simultaneously, guys. And that's a big difference, because think about it. If you're copy trading 5 accounts at the same time, you make $500, you just made $2,500 for the day. You make $1,000, you just made $5,000 for the day. So you see the scalable potential there is. And that's why I see a lot of people are able to scale fast and get to 10k per month with futures a lot easier, because it just makes it easy to scale. Now, the only annoying thing with futures is that they don't allow you to withdraw the full balance of your profit. So let's say you're on a 50k account, right? Let's say you made $2,500 and you're on profit and you've hit the eligibility off that account. It just depends on what model and what prop firm you're trading with, but typically they will say that you're not allowed to withdraw more than 50% of your profits at a time. So that means that if you made $2,500, if you're eligible for a payout, you're going to be only eligible to be able to withdraw 1,250. So they have like a 50% payout rule. It's kind of typical across the board. It just depends on which prop firm. But some prop firms have like a cap of like, okay, they don't have a 50% rule, but they'll say you're only allowed to withdraw $1,500 per cycle, or you're only allowed to withdraw $1,200 per cycle. It just depends on the account that you're trading. So it's very important to read the rules on the accounts that you're buying and just see what you're allowed to do and not do when it comes to actually trading those accounts. Now let's get into what prop firms actually recommend in the future space. What are the best prop firms to trade with in the future space, guys? I've only listed a handful here, only 4, but the reason why I listed these 4 is that they allow you to have an understanding of the different models within the future space. Now, the best prop firms I do recommend in no particular order, and we're going to go through them, is Top Step, typically the top step challenge, right? They have a 50% consistency rule in the challenge phase. Like I said, you're not allowed to make more than 50% of your overall profit target within a day. If you do make more than 50% of your overall target within a day, that means that your profit target actually increases. They don't have a consistency rule in the funded phase, so that means that you're free to trade however way you want to. You're not going to be penalized. So if you make 5,000 in a day, that's fine. If you make 10,000 a day, that's fine. As long as you meet the eligibility to get paid, you're going to be paid. And the eligibility is you have to make $550 days, and then you'll be eligible for a payout. So that means that let's say you made 20,000 in a day, and then the next 4 days you only made $150. You're going to be eligible for a payout, and obviously they have a payout cap of $5,000 per account. Obviously TopStep allows you to have 5 accounts at a time. They have an end of day drawdown mode. The account sizes that are available are 50k, 100k and 150k. There's no activation fees, and all activation fees are usually what they used to do in the future space was that you'd be able to get an account for, let's say, for like $50, which would be super cheap. So your upfront costs were super cheap, but then they'll have like activation fees, right? And activation fees that after you pass the account, you have to pay a fee in order to actually get access to the account. Now that's not really a norm. Only some prop firms do that, but that just depends on the pricing. So most prop firms offer no activation fee. So if you're spending $90 on a 50k account, that's all you're spending. There's no activation fees with most prop firms, and TopStep actually waived the activation fees. They have a model that allows you to select no activation fees, but it's going to be $90. If you take the other model that they offer, which has activation fees, you have a lower upfront cost, but a bigger buy-in when you actually want to activate the account. You have Apex Trader Funding, which is the only prop firm that I've known to be able to pay out 7 figures to multiple traders. I'm pretty sure you've heard of that. Pretty sure that's why you're here, because you've seen people make millions with prop firms in the future space, and Apex Trader Funding are the ones that have been able to do that. I was able to get a 6-figure payout in a single payout with TopStep, which is great. So they do pay out a lot more money, but Apex are the best when it comes to being able to scale, because the scalability is insane, and you're going to see why. They don't have a consistency rule in the challenge phase, but you got to remember it's a live trailing drawdown, so that means you can pass in one day if you want to pass. They have a 30% consistency rule in the funded phase, so that means that when it comes to actually making profits, right? Let's say you make $1,000 in profit in a single day. If there's a 30% consistency rule, to be able to start being eligible for a payout, obviously there's other rules to be able to get in a payout, but to be eligible for a payout, you're gonna need to be making at least $3,000 to be able to be eligible for a payout, because that's 30% off $3,000 is $900, I believe. So that's where the 30% consistency rule comes into play. Payouts are enabled above the buffer level. So typically with prop firms that offer a live trailing drawdown, they'll say that the trailing stops above a buffer. So let's say you get a 50k account, right? And let's say your drawdown is 2,500. To be able to get the live trailing to stop, you're going to need to make $2,000 plus 100. So for the live trailing to stop, you need to make $2,100, then the live trailing stop. It's annoying, but that's how they work. But they do that because, hey, you can make a shit ton of money with them if you trade them right. So they obviously have activation fees, and the reason why they have that is because Apex runs super cheap deals. Like you could be able to get a Apex account sometimes for like $20, which I know crazy, but they run those deals all the time. Code Gerald Trades. And also I'm going to leave a link in the description to all these prop firms if you want to actually get started these prop firms. I'm going to leave a link in the description below, and just go check that if whatever prop firm you're going to want to get. But yeah, Apex do that because they have super cheap upfront costs on accounts most of the time, right? So you might pay $20 to get an account, and then the activation fees is where they make their money. So once you pass that account, then the buy-in might be like $60, $70 to activate that account. It all just differs, but it's just different models. Obviously the account size that are available is 25k, 50k, 100k and 150k. The max accounts you can trade with Apex at a time, right? This is the crazy one, right? It's 20 accounts. You can copy trade 20 accounts at a single given time in Apex. And that's why they say Apex is the goat of scaling, because think about it. If you have 20 50k accounts and you make $1,000 on those 50k accounts, you just made $20,000 in one day. If you make $2,000, you just made $40,000 in one day. If you make 5k in a day on each of those accounts because they're being copy traded, you've just made $100,000 in a single day. And that's the beauty of Apex. Right, Funded Next features. I'm pretty sure you guys are aware of Funded Next, which is a popular prop firm in the Forex space. They have a futures prop firm to them as well. This model here is the funded next features rapid. They don't have a consistency rule in the challenge phase. They have a consistency rule in the funded phase, which is a 40% consistency rule. There is no activation fees. The trailing drawdown is end of day trailing drawdown, which is the same as top step. But to be able to get a payout with funded next features, that means that you need to make a minimum profit of $200 to $500. As long as you hit the consistency rule and you make $200 on a 50k account and $500 on a 100k or 150k account, you're eligible for a payout. Now the account size available is 25k, 50k and 100k. Now the amount of accounts that are allowed on funded next futures is actually based on the overall max funding, which is 300k. So they have a 300k max funding. So that means that if you're to get 100k accounts, that means you can only get 3 100k accounts. Obviously Take Profit Trader, they're also another prop firm. They have a 50% consistency rule in the challenge phases. They don't have a consistency rule in the funded phase. They're allowed to have daily payouts. Funded next futures also have a model that allows you to have daily payouts. But anyways, Take Profit Trader, they allow daily payouts above the buffer level. So let's say you have a 50k account, you have 2,000 drawdown. So if you make 2,000 plus 100, so above 2,100, anything you make above that, you're going to be getting a daily payout. So say if you make, let's say $3,000 in a day, you're going to be eligible for anything above that 2,100. So you're going to be able to get a daily payout of $900 on that day. And the typical profit split for most of these prop firms is 90% profit split. There is no activation fees depending on the offer they're currently running, but most of the time you don't really have to pay for activation fees. In the challenge phase, the drawdown mode is end of day, but when you get in the funded phase, the drawdown switches to trailing drawdown until you reach the buffer level. Obviously you're allowed a max of 5 accounts, and as you can see, the drawdown does need to switch once you get into funded because of the fact that it's daily payouts, right? They don't want people to abuse the system where they'll just full port. If you hit a certain amount in your funded, they move you to live very quickly, which is what most of these futures prop firms do to be able to sustain the business, because you remember a few prop firms only make money when you lose money. So to be able to sustain this for sustainability, a lot of futures prop firms just move you to live accounts fairly quick if you're trading good. That's just an indicator that you're a good trader. If you get moved to live account quick, that means that you're making money. And they move to live accounts where obviously you can get access to live funding, where you can get daily payouts at will and things like that. So it has its benefits. Take Profit Trader do that really well and do that really quickly. Once you hit a certain profit threshold, just go to their website and check them out. Advice for success when it comes to futures prop firms. As someone that's done 6 figures in the futures prop firm space, I think I have a few things I can tell you guys from experience, right? Pick one prop firm. If you're getting into this and you're just getting started, guys, just pick one prop firm. If you're going to trade with Top Step, trade with Top Step. If you're going to trade with Apex, only trade with Apex. If you're going to trade with Funded Next Futures, only trade with Funded Next Futures. So most of you might probably prefer Funded Next Futures because you probably already have Funded Next accounts. So go with that. Just stick to that and just master those models, and then eventually you branch out, because there's no point in trying to do everything at once, because that's just going to burn a lot of money. One, because you're learning, you're going to make mistakes, and two, is just it's not necessary. You can scale with one prop firm and then use the payouts from that prop firm to buy more accounts with different prop firms. The second piece of advice is go with the prop firm that complements your trading style the most. In the last slide we talked about different models and different rules each prop firm has. Go with the one that you think benefits you the most, because different rules work differently depending on how you trade. Third piece of advice is pass the challenge phase as quickly as possible. I don't care what anyone says, spending time in the challenge phase and taking time in it is a waste of time. So go for that as quickly as possible. I have many videos on this channel again, guys, about how to pass futures prop firm challenges and challenges in general fairly quickly, guys. The fourth piece of advice is utilize the copy trading system for scaling. If you're going to be buying 3 accounts, use a copy trader. Obviously, probably if you're starting out, you're probably going to be buying 1 account at a time, but as you get more confident and you start building up, start using the copy trader, because the work and effort of 1 account can be multiplied by like 5 or 20 accounts if you're trading with Apex, right? So that just allows you to make a lot of money very quickly. And that's what's important, is you want to get paid at the end of the day. So utilize the copy trading system. You can use trade copiers outside, and TradeOver actually has their own trade copier. It's very simple to use. You can just quickly go watch a YouTube video on how to use the TradeOver trade copier. It's built in, so you actually don't need to use an external trade copier. Another bit of advice is stack base hits, don't chase home runs. Don't shoot for the moon. Stop trying to go for $10,000 days, $50,000 days, $5,000 days. Stack base hits, they add up. It's about what you can consistently make, and it's so much easier to consistently make low hanging fruit than it is to go for home runs. You're gonna find that the more you consistently go for low hanging fruit for lower number days, you're gonna see you're actually gonna be a lot more profitable within your strategy, guys. So yeah, don't chase home runs. Let home runs come to you. When they do come, take advantage of them. But if they're not gonna come, don't chase them. Another bit of advice which is very important is pay yourself as quickly as possible, guys. Don't wait to have more money in the account so you can have a bigger payout. No, if you make money and you make a good return on what you put in, take it out and then scale and be a bit more aggressive after you've paid yourself. The quickest way to burn money is to just think that you can chase a big hit, and then you're gonna burn a lot more money in the process of trying to chase that big hit. Pay yourself as quickly as possible and then be aggressive if you want, because that account is essentially becomes a free account. All right, and the final piece of advice, guys, is scale into other prop firms. Once you start making money, when you start getting payouts, just like Forex, scale into other accounts. If you need to get an external trade copier, then do that, but scale into other accounts and just start growing your money. Now, if you guys are a bit confused and don't really have a strategy that can be applied into futures, I'm going to link a video to how I trade the AM session right here. Go check that video out. It's going to go into detail on how to trade the AM session, and it's very specific and tailored to the AM session. The last advice is that give this video a big like and share it if you find it valuable, guys. It goes a long way. If you did find this video valuable, comment below what goals you have for the future space and your plan for the future space, guys, because I truly believe this is the best opportunity there is in trading right now. It's never been easier to scale to 10k per month, and I'm pretty sure now you have an understanding of you can actually go in and start trading futures now because of everything I shared with you in this video. Buy accounts, obviously links in the description below. So yeah, guys, like, comment, subscribe. I do make IC related content on this channel every week, and I do also touch base on futures prop firms. So yeah, if that sounds good, subscribe, and I'll see you guys in the next video.